Basic of stock market for beginners. How beginners start share market explained by Tech Hidden. Disclaimer: this data is collected from Google and not sure to be 100% accurate. Let's start. News shows, Hollywood films, and TV all assume that you know what the stock market is and how it works. Everyone knows that you can make a lot of money in the stock market if you know what you're doing, but beginners don't often understand how the market works and exactly why stocks go up and down. What is the stock market? Stocks, which are also called equities, are securities that give shareholders an ownership interest in a public company. It's a real stake in the business, and if you own all the shares of the business, you control how the business operates. The stock market refers to the collection of stocks that can be bought and sold by the general public on a variety of different exchanges. How to invest in the stock market: 7 tips for beginners. 1. Buy the right investment. 2. Avoid individual stocks if you're a beginner. 3. Create a diversified portfolio. 4. Be prepared for a downturn. 5. Try a simulator before investing real money. 6. Stay committed to your long-term portfolio. 7. Avoid short-term trading. Detail. 1. Buy the right investment. Buying the right stock is so much easier said than done. Anyone can see a stock that's performed well in the past, but anticipating the performance of a stock in the future is much more difficult. If you want to succeed by investing in individual stocks, you have to be prepared to do a lot of work to analyze a company and manage the investment. You'll have to study the company and anticipate what's coming next, a tough job in good times. 2. Avoid individual stocks if you're a beginner. Everyone has heard someone talk about a big stock win or a great stock pick. What they forget about is that often they're not talking about those particular investments that they also own that did very, very poorly over time, Keaty says. So sometimes people have an unrealistic expectation about the kind of returns that they can make in the stock market. And sometimes they confuse luck with skill. You can get lucky sometimes picking an individual stock. It's hard to be lucky over time and avoid those big downturns also. 3. Create a diversified portfolio. One of the key advantages of an index fund is that you immediately have a range of stocks in the fund. For example, if you own a broadly diversified fund based on the S&P 500, you'll own stocks in hundreds of companies across many different industries. But you could also buy a narrowly diversified fund focused on 1 or 2 industries. The easiest way to create a broad portfolio is by buying an ETF or a mutual fund. The products have diversification built into them, and you don't have to do any analysis of the companies held in the index fund.